Thank you. Now, uh, uh, there is another flow I keep on it. So order flow, I'm sure that it's a very, probably it's common or it's not common, I don't know, but I'm sure you might have heard about order flow common uh, across it. It's not something really complicated. But at the same time, if you want to trade the smart money concept, you have to understand how the market, right? How the market flow. It is, yeah, there's a strategy they call order flow actually. I've told you guys during the last class, for those that were here, I've said it that these things are just names, right? The other strategy is called order flow, where they get to use some kind of advanced technical tools for the analysis. I don't think they don't really use candlesticks. I don't know. I'm not sure. I don't trade it. But the order flow me I will be teaching here is not that one. The order flow I'll be teaching here is just based on using combining the structure and liquidity to understand the direction of price, right? To understand the direction of price. So this is just like order flow is just like you understanding the volume of buy and sell orders within the market using candlestick, right? Using candlestick, this actually you can use this to to understand the volume, and then you don't want to trade against this. If the market is buying, you want to buy along. If the market is selling, you want to sell along. But probably if the market is buying, there is something you are seeing that will make you to want to wait before you sell, something like that. There should be a reason for you to do that. So order flow is just like showing this kind of buy and sell, like interactions between buyers and sellers, right? At different levels on your chart. I'm going to be using candlestick, like I said before. So you can use this to understand price direction. Now, be serious. I'm sorry, please. All right, let's continue. So, order flow, like I said, it just you understanding the interaction between buyers and sellers. So, we are going to be using candlestick for it. Now, when I was talking about liquidity last class, I did explain the buy side liquidity, the sell side liquidity, the internal liquidity, and the external liquidity. Right? So now we are now going to use structure and liquidity to determine order flow of price, or probably just call it price direction. You need to understand that whenever liquidity is being grabbed from one side of the market, right? The next move of price is to come and grab the next liquidity available. Now, the thing there is that even though price moved like this, we had a pullback. Then we took out the liquidity here, which is in form of what? External liquidity, which also in form of a buy side liquidity. Now, for price to move from this to this, there are other price action inside of it. I mean, if you understand what I'm trying to say, we are going to move like this, right? Now, after price has done this, by taking out this external range liquidity, there are other liquidity that price will come back to take, because price is going to move from taking one point of liquidity to another. And those other liquidity can be this low, could be this low, could be this, or even this. It is not limited to anyone. It does not have to be. I'm not going to tell you that, oh, after price has taken out the third one, that is where price will reverse. I mean, I won't tell you that after price has taken out the third one, that is where price will buy. No, because price could just come, take out the first one, and continue. At the same time, price could come, take out the second one, and continue. Now, this is why you need to understand order flow. Because after liquidity has been taken from one side, we are coming for the other side. Now, how will you know? My students have asked this question that how will you know that, okay, after price has taken one, we are going to buy, or after price has taken two? Like I said, I'm not going to tell you if it is one or two. Sometimes price might even come completely, take out everything before we buy. From just like the last example I showed. Now, this is why you need to always wait for this order flow to align. Now, we are going to use I don't want to limit this to time frame, but I'm going to try to explain this based on even though you are using a single time frame. Now, yeah, I've seen people using one single time frame for analysis. Now, this is it. If we had this push, I'm still coming back to this, right? If we have this push, we push back and we push. Now, you know that, like I used to say, for price to move from this place to this place, we are going to do this. So what is price giving us here? We are having a bullish structure. We are moving to the upside. For price to move from this to this, we have to sell. We have to create a bearish structure. We have to create a bearish structure. This is where the change of character is, which is the temporary change in trend. Now, we have to create a bearish structure in this aspect. Now, if you now want to join, if you just need to wait for this order flow to align, because if you want to join the buyer, you cannot start joining the buyers from every low you see. Like what I'm trying to say is that like just what I explained here, you cannot start buying from here because you don't know if price will take only this one and buy, and then you don't know if price will come and take two before buying. Then at the end of the day, if you are buying from here, you are going to, your stop loss will be here, and then you get stopped out of the market. So you don't know if price is going to come and take three before buying. That is why you need to wait for that order flow to switch. Now, after price has taken out one, two, or any number, price will take out the first, the second, the third, anyone. You just have to wait for the the bullish aspect to align with this, our blue structure. This blue one is the main structure. This blue one is the main structure, which is called the swing structure. The red one here, they are the internal structure. So if you want to join into this buy, you have to wait for this order flow to align back with the swing structure. You have to wait for it to align back with the swing structure. And then the best, I don't want to, like, the one that is more high probability, I don't want to use high probability because I don't really do high probability, low probability trade, A plus, all of those things. No, I just have same rule. I have same rules applicable to all the trade, and then all the trade must do same thing. It might not really look the same. Definitely, it will not look the same, but there should be this pattern or this repetition that you want to keep doing over and over and over again, because I've said in the last class, because that is the only way you can build confidence. It is not built in a day. It is built by what you do over and over again. So if you want to take the best trade, allow this order flow to align back with the swing structure after a retracement. Now, order flow is that price action that move from taking out one side of liquidity to another side of liquidity. If price move like this and take out one side of liquidity, we are coming for the other side of liquidity. After that, we come for another side of liquidity. After that, we now come for another side of liquidity. Now, it's not going to look like this on the chart. Let me explain how it's going to look on the chart. We are going to come like this. this is one side of liquidity. That is a I, right? We started selling. No, let me do something like this. Now, who is this BS? Don't let me remove you. All right. So now, if it is like this, he had a break above this I. I'm sorry. I'm sorry. Mm. All right. So let's continue. Sorry. Let me remove this. This guy dropped. All right. So now this is the break of structure. Now, like I said that this is how it's going to look like. We are going to look like this. It is going to look like this. Now that we had this break of structure, what do we have? Another break of structure. All of them are basically their break of structure. This one too is a break of structure. Now we are going to move back because now we have taken out liquidity from this eye. We took our liquidity from this eye. We took our liquidity from this eye. We are now going to move back to at least take out one side of liquidity from here. That is the internal lows. These are internal lows, right? Now we are going to do like this. Right? What has been taken out? This liquidity has been taken out. So price move from taking out this one here, this external one, and we reverse back to take out this one, which is what? The internal one. Now, after price has taken out the internal one, price will still continue to take out another one, right? Which is this. Now, because I used to say that price move from internal to external does not mean you now start trading blindly without understanding this concept. Now, after price has taken out this external, price came to take out the first internal, we came to take out the second internal. Where is the next place for price to go? Like I said, price can still come here, which is the third one. Now, because now if price start buying, if we start reversing back, what is that reason for the buy? I mean, there should be a reason why that pullback happened. I mean, if a real pullback happened, not just some like a real one, just know that price is coming for another liquidity. Now, that another liquidity is not going to be external. Yes, it's true. I said price move from internal to external. It's true that I said this, that price move from internal to external, right? Like the first day, for those that are there, the first session I had, this is what I explained. The price is after external. Now, this is the external, right? Which represent the break of structure. So I said that price is going to come back to take out internal, right? And then we are going for what? External, right? Which is what? A break of structure, right? After that, we are coming back for what? Internal. We are coming back for internal, which is this low. Then we go again for the external, which represents a break of structure. I've said that this is what you should try to always focus on when you want to mark out your market structure. Not this, not price moving in sideways like this. No, absolutely no. Because at the end of the day, price is still going to come to take out all this internal before we now go again. Now, this is where some people now tend to make mistake. If price is not coming to take out internal, they will not classify it as a change of character. Meanwhile, it is not a change of character. This is price coming to take out internal, and at the end of the day, they want to start taking sell from every supply they see from this leg. They want to start taking sell from every high they see from this leg. They want to start taking sell from here, anyone they see, and then because price has taken out internal, which are all of this one, the next direction is what? External. And if price gets into the first entry, they got stopped out. The second entry, they got stopped out before price will now go for here. And then at the end of the day, they got stopped out. Instead of them trying to focus on this order flow, this place where the buy start from after taking out liquidity. This is the first thing I explained in the first section. Now, if you understand this concept, you should understand what I'm trying to say here. What I'm trying to say here now is that if price take out internal, we are coming for the external, right? Now, this is the external. Price has taken out first internal, price took out the second internal, so price started buying. So our expectation is what? External, to give us a new break of structure, because this is the first break of structure to the upside. This ones too, they are break of structure, but not yet valid. I've said that the only one that is valid is when price take out liquidity before breaking it. This is it. If price take out liquidity before breaking it, you are going to consider this as a valid swing low, and this is the valid break of structure. But if this happen, no, this, you don't want to do this, because after price take out this external, which looks like this break of structure, price is coming back for something, which is the internal. That is before price will now go back to give us a new break of structure. So this is how you should always view your structure every time. Now, like I said, this is price coming for what? For the external. But you need to understand that price will not just, I've said that price will not just fly in. There are other things, those interactions will still have to happen, because let me tell you, there are people buying and selling from every highs and lows. From there, that is why you will see all this pullback you are seeing. Something is actually pushing it. Something is pushing price. Something is giving that pullback. Something is giving this pullback. So there are people selling from here. There are people selling from here. People are buying from here. People are selling from here. People are selling from here, everywhere. So if price takes out this internal range liquidity, this internal structure, your expectation is for price to come for the external. But just understand that price will not just come here straight, because price is going to do something like this. We are going to first take out, sorry, let me draw it very well. Price is going to do something like this. We are going to first take out what? One side of liquidity. We are going to first take out one side of liquidity, right? Which is what? Which is this. We are still coming for the external, right? But like I said, price is going to move from one side of liquidity to another side of liquidity, back to another side of liquidity, back to another side of liquidity. So that is why you need to just, like, even though price is coming for this high, it is not something that price will just, fly there, except maybe, even though there is news or whatever, for price to even get there, all of this reaction have to happen, because in the market consists of buyers and sellers, and this interaction is what gives us that price action. Without candlestick, there is no chart. It is the candlestick that makes up the chart, and that candlestick is the representation of what the buyers and sellers are doing in the market. Those candlesticks you are seeing there. So if this is what you want to understand, this is what I feel that many people are missing out when it comes to structure. They just want to start taking trade from every supply and demand. It does not work that way. Even though you are going to end up taking a buy, I'm going to show you a valid example of a buy from Euro JPY, even though I end up missing the trade. This is exact same thing that happened. Now, if price move, understand that if price move from internal, right? Let me redraw another one to make it more clearer. Understand that if price breaks structure, right, you see your first break of structure. I'm sure many of you see a break of structure, maybe with some few bullish candlestick, very, very clean break. Price broke above it and then closes above it, right? Definitely before price break above it, you are going to have something like this. Look at the way last 100 broke structure to the upside, right? Now, it's just that when the price reversed back on last 100, it was in the midnight, which I was not available to trade. But if that price action presents itself during the day, or even though it's during London, please mute your mic. Please. Even though
Right. Who's on our way? Okay.
I'm actually looking for the person. .cv. All right. So See the way NAS 100 broke structure to the upside. Even though price is buying, I mean, price has been bullish since last week, Friday. It's been a week now. Price has been bullish. And then we kept on buying. After that break of structure happened, you can see the way we pulled back into something. This is it. We are going to have something like this. We are going to have something like this. Break. Right? Now, after we had this break here, we are going to pull back into something which is the internal, right? Which is the internal range. Now, for price to pull back into this internal, price will not just do this, right? We are going to have what? We are going to still have something like this. And price eventually pull back into the internal. Now, where is the next place? External, right? Now, for price to come for this external, we are going to still do same thing. I mean, we are not still going to do it like this. We are still going to do same thing again, right? It is going to be something like this. First, liquidity. After this, so that means we move from taking out this liquidity 1 to this liquidity 2 to this liquidity 3, not here. Right? Now, after we took out this one, 3, right, we are going to have what? This is why I say that from every point, people are selling and buying. I mean, this place here, there are people selling from here. This place here, there are people selling from here. Even the extreme, there are people selling from here. So we are going to have a kind of reaction before we take it out. So indicating what? That this liquidity has been taken. You need to understand that your break of structure, it is also liquidity taken. Right? If price broke structure, this is a break of structure, right? This is liquidity taken too as well. This is the first liquidity that was taken before price came to take out the second liquidity. Price bought to take out the third liquidity. Where is the next liquidity? This is going to be the next one, not this. Now, you need... I'm sorry. Silence. Silence.
Hello, ma.
Yeah?
Please, I want to ask a question. Yes.
No question is allowed, please. Whatever question you have, just write it down. On the last day, you will be allowed to ask any question you have. If your question is based on the current image now, you can draw it out. You understand? Draw it the way you are seeing it now, so that next, during the last class, you'll be allowed to ask any question. Thank you. All right. Now, if this is what I'm trying to explain, that if price move from the first liquidity, the first point of liquidity to the second one, now this is going to be the third one. Then where? This is the fourth one, right? The way I'm explaining it, I'm actually using this part. So you might be like, oh, it is not really like, it might not really be clear on the chart, right? It is there on the chart, but it is not clear. You are not seeing it. But if you study price, you will see that price moves in cycle. Like price does just not. This is what will help you build that confidence that price does not just move from like one random place to another random place. There is reason for price to move from this point A to this point B. And if you understand it, that is what will help you build patience. That, okay, let me just wait. It is not every time. You can miss trade. You can get stopped out before price start buying. You can get stopped out before price start selling. All of this happen. All right. It is just this is just you taking trade that over time you can accumulate profit. It is not that it's something that will just happen one day. It was not like it is not possible, right? It is not possible. It's something that takes process. So if you understand this price cycle in form of order flow, that price move from one point of liquidity to another, and what you should always focus on is on the next liquidity, This will even help you to know when or how to take your partial. The next liquidity, not at the end of the day, price might still come for I mean this external, but you need to understand that prices, because now I'm sure that you have seen or you might have seen this kind of structure before, in the sense that after this thing happened, this thing I explained now, after it has happened, price will now go like this, price will now move like this. Take this one out, right? Now, instead of like people are buying, right? Now, you don't see price do something like this, and boom, to the downside. Yeah, you might have seen this. This is price selling from this supply. You might have seen this. Because now, even though price took out internal and you were buying so that price should come here, and then you get stopped out, probably you might have, let me say you entered the buy from here and then you broke even and you get stopped out. It's because you don't understand this. You don't understand that price now move from A1, let me use A, to B, to C, to D, and E before we now sell. But you were actually targeting this external high all of a sudden, forgetting that these are also liquidity that they are capable of pushing price to the downside. I'm sure you might have seen something like this. And then for price to do this, you need to understand that maybe or probably the higher time frame is what? Maybe it has been bearish. It is just you that you did not know. Maybe this is what the higher time frame is doing. Maybe like the daily time frame is doing. But because you are on your 1 hour, you get lost. You got lost with the all moving from one time frame to another, then you lost track of what has been happening from the higher time frame, and you see price doing this, and you be like, oh, but this is a break of structure. Price was supposed to be bullish. You are forgetting that from the higher time frame, price has been breaking structure to the downside, not to the upside. Now, this one that happened, this break of structure to the upside, this one here, it is not price breaking. This eye that you take as a break of structure to the upside, it is now an internal range liquidity of this whole bearish leg. So we now have this whole buy stuff now become the pullback before we now continue the sell. This might look complicated, but actually it is not. It is not, because at the end of the day, you don't want to stay on one time frame. You want to go down to lower time frame to probably minimize your because you cannot choose a supply from 1 week and start taking the trade from 1 week. Definitely not. You want to go down to daily and maybe try to like what did they used to call that thing? Refine. Yeah, refine the point you want to take your sell, you want to take your buy from. You might want to go to 1 hour, try to refine, and by the time you keep on going to more lower time frame, this thing will keep changing, right? You will keep seeing something else. Maybe the 1 week is bullish and then you get to 1 hour is bearish, right? It is because everything that is now happening on that 1 hour that looks bearish, it could just be an internal structure from the whole bullish, from the whole higher time frame. So, like for instance, I've explained this during the last class. If this is the higher time frame now, on the lower time frame, I mean your internal, you are going to see something like this. You are going to see something like this. And then let me say on the lower time frame that you are, let me say 1 hour, this is where you saw the price. And then you will not start selling. You are selling, and then you sell again. After price has taken out internal from the higher time frame, what price has want to do? Price is now coming for the external. Now, you are still selling, right? You got stopped at the first time, you still want to sell here. You got stopped at the second time, you still want to sell here. You got stopped at and this is, you are seeing it that, let me draw it again. Let me draw what I'm trying to say. This is it. Now, I'm going to change this color to red. So this is what I'm trying to say. So let's say this is the lower time frame. So we kept on buying like this. We kept on buying. So let's assume that when you get to your chart, price was somewhere here. So you saw this as what? A change of character. Now, this you started selling. You started selling, right? You started selling. Now, from the higher time frame, price is done with taking out the internal range liquidity. You know, for this sell to happen, price is coming to take out internal. So price is done with taking out the internal range liquidity. Price wants to start buying. So now you will now want to start taking yourself from here. You want to take yourself from here. You want to take yourself from here again. Now, if price start buying, price got there, you had a reversal, got stopped out. Now, price got here again, you had a reversal, you know, the thing there is that you are not paying attention to that structure. This reversal that happened here, this push here, this is price coming to take out this liquidity. Because price has taken out this liquidity, we now move to this. But you are not seeing this as a break of structure again to the downside. And the thing there is that we now want to start taking another sell from here in form of a confirmation entry. So price has taken out this one here. Where is the next one? This is going to be the next one. Now, price, we start buying again. I take this one out. We go stop that again. We come here again, right? Let's assume that is the extreme. This is the extreme. Now, the extreme, the price might actually reverse back. Definitely before, you're going to have that reaction from there, right? Now, price get to your extreme. We have a reversal back again. This is what internal range liquidity take it. But you are seeing this, you are seeing that as a breakout structure again. Now, that is another zone you want to take a sell. Confirmation entry. In fact, it's going to look like something like this again, right? Confirmation entry at the end of the day, you got stopped out, a price move, and finally breaks out the higher time frame, giving us a breakout structure. So this all sell buy here, they are internal structure of this swing. The blue one is the swing. They are internal structure of the swing. So you just have to understand when you are trading in the direction of the market or when you are trading the pullbacks, right? This is just simple. This is just the basic explanation of that cycle and all of that. All right. So now let's go to the charts. Let's go to the chart. Spend 45. So I said I'm going to show you guys example. Let's first, okay, we're on NAS 100 already. So let's go to NAS 100 now. This is what I'm trying to say. Now look at NAS 100. Price broke above this high, which is the external high. Do you see a pullback before the second buy happened? You see this sweep before, this is what I'm trying to say now that, oh, I'm coming. All right. I should have cleared that before so that I can just refer back to it. This is a breakup structure. But now I want you to look at, let me use a barrier. I want you to look at it before price broke the structure. Look at it. I'm very, very sure there are people buying from here. Even selling from this supply here. Even the extreme. Let's take this as the extreme because price did not really mitigate it. Yeah, because I can remember then this could be inducement or whatever. They are selling from the extreme. But you can see that I've said that price is like this said here is the pullback. Is the pullback is not a bearish structure on its own. Is the pullback to take out what internal range liquidity. It is a pullback. Now, if that is the extreme where they want to sell from, let's now look at this reaction that happened. This is 1 hour. Let's look at what happened there. We had a sell from there, very little sell, right? Like this is going to be like this. Probably might even do like 1 to 1 hour, something like that. Now look at it. This is what I mean. In some cases, thank God this is okay. In some cases, it is going to look like it is going to be a body close, a full body candlestick close, which is going to look like a form of a breakup structure. It is going to look like very good. Look at it from here. It is going to look like a form of a breakup structure to the downside. Look at that. Oh, price has broken structure. They want to go for what? Confirmation entry, right? They want to go for confirmation entry, probably. Yeah, something like this. Sweep, right? After that sweep, this is it. This is it, right? This is what they now call the change of character, or break of structure. Anyone, they want to start selling as a confirmation entry trade, but this is not a change of character. Next time, if you want to take the sell from something here, wait for that order flow to switch. In the sense that you need to understand that if price take out 1 point of liquidity, we are going for another. And from this structure I'm seeing here, the next one will be this high, right? Look at this high here. Now, another one will be this high, and the last one will be this high. So now, looking at this kind of structure, I see no reason why you should start selling from here. Like it's not valid. Now, another reason is even though you are not selling from here, right? I see no reason why you start selling from here. So definitely this is out of the whole equation. Now, this is going to be the next one. But you can see that this one has tapped into this. It has tapped into this. So the next place I'm seeing here is this high. This place here is this high. The price is going to come and take. So this is price moving from internal back to this external. So for price to come and take this external, we are still within the extreme supply. Let's see, price might still come and still sell, right? We are still within the extreme supply. So now we got there, very good. You can see that immediately we took it out. I didn't even see this, but immediately we took it out, we reversed back, right? We started selling, and then we moved sideways. I want you to look at it. This is what I used to tell you guys, that this kind of structure, I don't trade it. I mean, something like this, I don't trade it. Because at the end of the day, price is going to come. You see, price is going to come and clear it. Let me show you what I'm trying to say. Or this is a sideways move, something like this. This is a sideways move, something like this. In all of those moves, price did not take out any of the low. We didn't take out any internal range. So at the end of the day, price is going to come and take out one of them before we now continue the buy, right? That is what I'm explaining. Now, let's move to it. Now, you can see that we now took both this one and then the extreme, this I, which is at the extreme, we took it out. So this thing that happened here is the same thing I was trying to explain. It's the same thing I was trying to explain, where? Probably it's not here. Yeah, very good. It's the same thing I was trying to see this sell from this extreme. This sell from this extreme here, and this push, it's going to look like a break of structure. But this is price coming to take out internal. And then we are going to even get to that supply where you are taking your confirmation entry from before we now push it. So you can see this is how price is going to move. So this is price coming for internal to this external, not a break of structure, not a place for you to start selling. Now, this is what price did. Now, look at everything that now happened. Everything that happened. Look at everything that now happened. Let's continue. All right, so now let's see the next thing. Now, we kept on buying. So you don't want to start jumping. This is 1 hour. You just have to be patient. You don't want to start jumping in every other. Just know that price is coming to take out any one of them. Any one of them. It could be any one of them before the push to the upside. Any one of them at all before the push to the upside. So this is how you want to keep on following the structure. So all right. So we took out just one of them. We took out this. We didn't come for this, but we took out this before we continue buying. But you might not really want to start engaging in this kind of trade. But this is just after price has broken structure. So I personally like to engage in this kind of trade before that break of structure happens. I mean, something like this before it happened, so that we know that my targeted liquidity will not be this high. Okay, the Euro JPY one I want to show you. Now, this is the Euro JPY one I'm talking about. Now, look at it. Look at what happened here. After price took out this point of liquidity, we moved to this point of liquidity. We moved back to this point of liquidity. So the next one is going to be this point of liquidity. I did not start expecting price to start coming here. You move from point 1 to, no, sorry. You move like this. 1, 2, something like this, right? So we move from this to this to this to this and to this before this extreme high, before price will come for the extreme, whatever extreme, even this extreme, price is going to move from this to this to this back to this. Though when I start talking about POI, I'm going to talk about choosing this. So the entry was somewhere around there, right? I think it was a 45 minutes candle. Yeah, this other block here, something like this. So price will not get there. This. So, but I understood that since price has taken out, look at this sweep from the higher time frame, right? We are going to get to top-down analysis. We are going to get to top-down analysis. So you see how I navigate from the weekly. I usually start my top-down analysis from the weekly. Sometimes I even go to monthly, right? From the weekly back to the daily to 4 hours, sometimes 8 hours, not all the time. then to like 2 hours or 1 hour, then so on and so forth. So look at this one again. Look at what JPY did. After we took out this, we came for this. So we moved from this to this, to this, to this, this, then probably we can move to this, right? And then if price is going to continue the sell, if this place is going to be if this price is going to continue the sell, tomorrow, after you are going to see price giving a pullback, right? So in case price now ended up buying from here, just know that the next liquidity is going to be this, right? The next liquidity is going to be this. And if price wants to continue the sell, then we continue the sell from there. But you cannot just, after price move from this one, then we moved back to this one. Now, this is another liquidity that is available. At the same time, this one too is available. I've said that every low or every low and high is their liquidity. Even this one, it is available for price to take out. So if price is coming for this, right, we have taken out this, so we can still come for this. But if price is not coming for that one, if price is coming for the low, if price is coming for this or for this, we are going to see price print out a liquidity before we not take it. Now, this is called, I didn't really explain engineer liquidity and inducement during when I was explaining the real liquidity. So that is going to be part of the next, because there's no way I'm going to talk about POI. I won't talk about inducement and engineer liquidity. Absolutely no way. But so when we are talking about POI, that will be part of it. So now, let's look for let's use the common popular Euro USD. So Euro USD, nothing much. No, I'm not really checking it because nothing. So now this is Euro USD. You can see what price has been doing. Like price has been kind of giving this bullish move, right? Now let's look for example of what I explained, how price move in form of order flow. Our price moving from a order flow. So now, look at everything that has happened. Let's go to higher time frame on the 4-hour time frame. Look at the structure of Euro USD. Let's use here from here. Sorry. All right. Serious now. All right. So now, let's start using it from here, like this. You can see how price move. You can see using structure liquidity now and the order flow. How do we start? After we broke above this high, right? I've said it. Where next we are coming for internal range. Let me cut it out like this. Now, from everything I'll be explaining about structure, right? Everything I'll be explaining about structure. This is what I used to say, that some people, when they see that bullish structure, they will not forget that the higher time frame. All right, this is where the drawing is. I need to refer back to something before I go to Euro USD. Now, when I was explaining this structure from here, when I was explaining this particular one from here, I said that some people are actually focusing on this, right? And I said that in some cases, what did I say? I said in some cases, price is going to now come here and sell, right? They are focusing on what? They are focusing on this bullish. They are taking this as a break of structure, which is correct. They are focusing on this bullish move, and their expectation is that price is coming to break out the next one, or we are coming to break structure next. Their expectation is that we are coming to break structure next. That is their expectation. But you will not see price move like this, and then we now completely sell, taking out our protected low. You know that this is our swing low. This is the protected low. This is the last low that probably take out liquidity and broke structure. So Your expectation was that, oh, this is the swing low, this is the swing high, because this is the high that took out the internal range. So next we are going for what? We are going to break structure. That is your expectation, that we are going to break structure. But now you now see that price, instead of price going to break structure, we sell and come and take out our swing low. So I've said it that some people got lost in that particular time frame, forgetting that where they are coming from, probably the structure has been bearish. So this whole bullish move that happened here, it is just a pullback. Then price now gave this to sell. But you got lost at the middle of this bullish move, expecting a new break of structure to the upside. Meanwhile, the structure has been bearish and price is going to sell. Now, I have to go back to this so that before we continue on the one I wanted to use on Euro USD. So let's go back to it. I don't really remember. Yeah, so but let's just use, let's look for anyone. I really don't want to go far. I want to use more of the something that is not really that far. Okay, let's use this. All right, so this is it. Now, we had a break of structure. We have a break of structure. This is the swing low. This is the last low that took out all of this internal range liquidity and they came to break structure. Now, after we broke structure, what are these? These are the internal range liquidity I talked about, all these pullback. So this pullback here, we are coming to take at least one of them. At least one of them, right? So now, since we are expecting price to come and take out at least one of them, you know, from what I've been saying now, that your expectation will now be that our price is coming to take out one of them, and we are going to break structure next, right? That is going to be your expectation because price has been bullish. But this is the 4-hour time frame. If you look at this structure now, you will see that price is bullish. We took our internal range liquidity, we broke structure. Definitely, we are coming back to take our internal range liquidity, and we are going to break structure again. That is going to be your expectation. But let's see now. This is why I said you don't just focus on that only. Because for price to come and take out this internal range liquidity, we are going to have this. Now, eventually, we took it out. I've said it that we are not coming immediately for this. The first thing you focus on is the 1 year, right? So meaning that we move from this to this 1 year first, not this 1 year. Because at the end of the day, the reason why I'm saying this is so that you will learn to understand that structure from 1 hour could be different from structure from daily. Your daily might be bullish and 1 hour might be bearish because that 1 hour could just be a pullback of what is happening on the higher time frame. That 15 minutes could just be a pullback of what is happening on the 1 hour time frame. So if you understand this concept, you will not get lost. Like if price is coming to take out that internal, we are going to have this. Now we took our internal, we are going to still have something like this first. Now we cannot come for this before we now go for this. And then sometimes price is going to do something like this. Take out the internal, right? Take out the internal as expected. We came for this first. Then we now go for this. Then we now reverse back and then we go for this. Right? Now look at this particular Euro USD. Now we are reversing back. We took out internal range liquidity as expected. Good and fine. What is your expectation? Yeah, right? Now, I've said that price will not just come here. You should focus on all of this one, which are still the internal. Sorry, all of this one, which are still the internals. So let's go to somewhere that is much more clearer. All of this one, this is still an internal range liquidity. This is still an internal range liquidity. So you need to understand that after price has took this one out, price is coming for this first, then this before this. Now, let's see what price is going to do. Now, we took out that one, right? Now, after we took out that one, so meaning we took out this low, which is an internal range liquidity, we now move to this one. We now move to this high. So there is another point of liquidity, which is this low. right? That is another point of liquidity, which is that low. So we took it out and then we went for the external, right? Now, I want you to look at something here. This is why I'm not really talking about entries, right? I'm not talking about entries. I'm not talking about time and all of that. I'm just explaining order flow, structure, and liquidity. We move from this to this. So this is what internal range liquidity, right? This is going to be the external, what, right? But price is going to take out all of this first before coming for this. So we took out 1, back to 2, then back to 3 before this, right? Now, if that happened, now we took out the external, then we started reversing back to this. You don't just expect price to come for your external because price has taken an internal. You don't expect price to come for the external immediately. You are going to be following structure based on one point of liquidity to another point of liquidity. Since this has been taken, where is the next one? This. But before price come for this, I'm sure that price is going to do something like this again. Right? So before price will come for this one here, price is coming to take out all of this. And sometimes price is going to come and take them out and continue the buy. And then again, price might take them out and continue the sell. That is why you need to understand price direction using your structure and liquidity. Right? So now let's see what is going to happen next. Now we have this one, right? And this one. I'm not going to start talking about this one. I'm not going to. I've seen a lot of people, right? I'm serious. Even me, I've done it before. I'm seriously speaking, I've seen a lot of people do something like this. They will not do something like this. And then I'll be like, I'm not saying it's not possible, but you just have to understand that price will not fly here, right? And this is why some people tend to miss entry because they are totally neglecting that current structure. I always tell my students, focus on current. That current structure is what will make you money. You want to trade, right? You come to the chart to trade. So why focusing on, you focus on what is happening, that current structure. You want to focus on it. No, it is not me now. It's not that I will now go and draw out something like this and then I'll do something like this. You know, this like I'm basically teaching you, based on how I trade. I'm not saying this does not work, right? But it is not sustainable because at the end of the day, there are ways. If you understand structure, if you claim you understand structure, there are ways you can actually engage. Please mute your mic. There are ways you can actually engage into a very clean sell, a very clean one, not even complicated one, for price to even get to this place that you mark out and you are waiting for price to get there. There are ways to get into it. And then I don't really like doing buy to sell POI or sell to buy POI. I trade based on liquidity. I have always said this over and over again. All my trades are solely based on liquidity, not because of supply and demand. I solely trade based on one point of liquidity to another point of liquidity. If I take a trade, there should be a liquidity I'm expecting price to take out or I'm expecting price to target. So that is how you want to create your rules. You want to create your rules in a very, makes it simple, easy for you to understand, not complicated. So now if we have 2 points of liquidity now, price is going to take out one of them, right? Let me just be fast. Price is going to take out one of them before price is has to take out one of them before coming for the other. That is how price moves. So all of this move now, you can see that one thing I want you to observe is all of these are moving inside. Okay, let's check. Price has come to take out. Let's check this. This is not really a very clean sweep, but price took out that high, not really that clean, actually, not really that clean. If we are talking about POI, I will have explained why we had that sell from here. If we are talking about POI, but we are not in POI now. When we get to POI, we explain how you can get to choose just, you will know that right candlestick, just one simple candlestick. If you check if you go to my Telegram channel and you check all the trades I've taken so far, you can never see me doing something like this. You can never see me doing something like this. No, not even that. Yeah, something like this. I mean, if I'm going to take a buy, I want to choose that single, just one, that single candlestick price is going to buy from. One of them, not having to join everything and then you do something like this, right? That is because I understand how to choose my point of interest, right? So now you can see what I'm trying to say now, that after price took out this internal range liquidity, our expectation was for price to come for the external, right? But you can see what price did. What did price did? Price did not come for here immediately, right? So if you are taking a buy from here, I see no reason why you should start targeting here. But instead of that, price came, took this one out first, then we now came for the external, right? Now, before we continue selling, now price is still selling. So this is our swing low. This is our swing high. So everything happening, you understand that we are inside of the swing low and the swing high. So we can still continue selling. Definitely, we can still continue selling to the external low, right? So let's see what price is going to do. Now, price now move from what? From here, we move to another point of liquidity, back to another point of liquidity. Let's see if price is going to take out that low. And if price did not take it out, just know price is coming for this high. And we are still coming to take out that low, definitely, because price has taken this one out. So this is going to be the next one, right? It is going to be the next one. Let me be fast about it. So now we took it out. You can see, so we moved from this point of liquidity. We did take it out first before we now clear this one, before we now move to this. So after this one, where is going to be the next point of liquidity? This one first and this one second, right? Let's see if price is going to come and take out that high. Very good. Now we now move from here back to here. Where is the next point of liquidity? This one first. This one is going to be the next point of liquidity. This one too is still a liquidity, but this one is going to be the next point of liquidity we are supposed to take out. Very good. Now, after we took out that one, where is the next point of liquidity? Now, we have this one first, this one second. Now, let's see if price is going to take it out. All right, so we did not actually go for this. Instead of that, we came for this. So we are still very much bearish. If you understand market structure, I don't see why you should start buying this kind of price action. We are still very much bearish, but just understand that we still have this high as liquidity. All of this one, they are still liquidity. So my price has to take out one of them, because price moved from liquidity to liquidity. Price should not just fly. All these three I mentioned, we took out this one, so we didn't get to this. All these three I laid down. Price has to just take out one of them. If you understand, I'm telling you that no strategy is 100%. But if you understand how you trade, how you want to trade, when you should trade, you will be patient. Even though you ended up missing that trade, still follow your rules in the next trade. That is why you need data. That is why you need to go study, gather those data for you to understand your strategy or how you want to trade, so that if you missed out a trade, you shouldn't. I don't see why you should start panicking, right? There is chance there every time, right? If truly you are being sincere with yourself while backtesting, while studying, if truly you are being sincere with those data you gather out, and I mean you have, right, you are going to see that same price action over and over again. I mean, that trade is going to come. More trades are still coming, right? More trade will still come. So this is how you want to see price. Now, we took out this one again. Just know that price will move from this to another one, right? But definitely I cannot start buying and selling and buying and selling and buying and selling. No, it's not. That is not. You don't want to do that, right? Instead of that, you want to take your trade, and then you want to know that higher time frame. Like you want to hold your trade, like for a very good risk to reward. Now, this is it. From what I've explained from this structure, this is the first internal that price took out. This is the second internal that price took out. Where is the next place? There is no internal again. The next place is the external. And then we are bullish. This is the breakout structure. We are bullish. So our external should be protected. Price should not take this out because we are in a bullish structure. Your low should be protected. Your high should be taken. So high should be taken is that, on the norms, price was supposed to come from here for there to give us a new breakout structure. That is on the norms. But now, how will you know? This is just a very valid bearish structure. You can see how price swept this high, broke structure. Swept this high, broke structure. Swept this high, broke structure. All right. I'm saying that probably price might take this or price might not take it because it swept liquidity and broke structure. Let's see if price is going to take it. Okay, we took it. So we swept this high, broke structure. Right now, this is a very clean bearish market structure. So you want to keep following That's strength. I mean, that's selling. And then the next targeted place, like I've said, the next targeted place is going to be this low. There is no internal. So even though you are able to get into a sell from here or a sell from here, you understand that price is coming for this low because there is no internal range liquidity for price to take again. This is the first one, which has been taken out. Sorry. This is the first one, which has been taken out. The second, which has been taken out. Instead of price to switch bullish, order flow to switch bullish from what I've explained. Instead of that, we kept on selling. So where is the next? Is going to be the external. So is it that, is it that the bullish market structure we drew out, is it that it is now wrong? Right? Let's see price will take it out. But definitely price take it out. We formed equal lows there already. So we moved to that high. We are going to move to that high before. Now, this is it. We move to this high, back to this low. We move to this high, back to this low, right? Before we now continue selling. So is it that our what did I want to say? Is it that the bullish structure we marked out, is it that it is wrong? You can see what I'm trying to explain here. We move from this high back to this low, back to this high, before we now move to this low, and then finally, is it our bullish market structure that I draw? It is because you are focusing on this one here. This one here might just be an internal structure. If you are to like go to higher time frame and zoom out, you can clearly see that the market is actually bearish. This is the pullback, so we are actually bearish. So this low here that you are calling your internal and that you are calling your swing low, that you are expecting price to protect it, it is what? It is actually an internal range liquidity. This is it. That a push, a pull, a push, and a pull. So this is the internal range liquidity. Why? Because this low here that you are calling the swing low did not break the external high. You can see that we are still moving inside of this and this. We are still inside of this and this. You can see that the market has been bearish. This is the external break of structure. I actually zoom in. If you go to higher time frame, it's going to be much more clearer. You can see that the market is actually bearish. Right? You can see we even broke to this low there. So you cannot start, engaging into every of these markets, right? Every of the trade. But if you try to always focus on the present structure, all right. If you try to always focus on the present structure, you can always take advantage of it. What I mean by present structure, if you understand structure and you are clearly seeing this as bearish, I see no reason why you should start marking a small place from here, you want to buy. A small place from here, you want to buy. You want to just buy because of this single break of structure. Meanwhile, this break of structure you are even seeing, it might just be a pullback, not even the main structure. It might just be a pullback. It might even be just an internal range, internal structure from the higher time frame. It might not even be the main structure. So you have to always see the bigger picture. Don't get lost on one time frame, right? Know how to navigate your time frame, right? And at the end of the day, you just have to take advantage of the best trade. Some might be, you should always learn, at the same time, know when to, switch bias, know when to. If you just stop that the first time, I've seen when people had something like this, when a structure like this, and then they are going to just mark out about 30, right? About 30 points of interest. Is it that you want to start placing trade on one of them? I don't understand, right? This is what I'm trying to say. One of my students sent the chat to me. I've forgotten this thing. I can't remember. I'm sure it's not currency, but maybe like all this gold or US oil or something. Right, maybe gold or all this US oil or something. Now, this is what I'm trying to say. If you have something like this, we broke structure, right? We broke structure. I understood that we broke structure. Let's even assume we swept liquidity. This is going to be the last explanation I will do before the end of the session. So let's say we swept liquidity and we broke structure. Now, if this is the sweep of liquidity and this is the break of structure, right? Now, I have seen a situation where you do this, your first point of interest, right? Correct? Second point of interest, correct? Now, price, you need to understand that even if price is going to come into this place here, it is not that price will just come like this. right? And then price will now do something really, really obvious. Something really, really obvious. Very, very obvious. You will now totally neglect all of this bearish price action. All you just want to do is this. All you just want to do is just to add the buy from here, especially when it is now like 4 hour, right? What happened to all this present structure? Because at the end of the day, price might even come there and sell. At the end of the day, this break of structure you had marked out here might just be an internal structure of the overall structure, just like what we saw on Euro USD now. That all of the bullish move we had, but it was just an internal structure of the whole bearish structure. At the end of the day, let's continue selling and continue selling and continue selling till we took out this low. So, guys, this is going to be the end of the class. Yeah, okay, this is going to be the end of class. That is why